The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Now, gold started the year on a bullish note. It broke above the previous high of $2,790 per ounce earlier last month and notching new highs in the trading sessions thereafter. The recent surge in gold price can be attributed to several key factors that have converged to create this perfect storm for the precious metal. Now, in fact, some analysts say we could see gold advance towards the psychological milestone of $3,000 by March. So what factors could push gold prices up to this milestone level, and will this rally sustain? Well, to find out more, joining me now is Alexandra Symeonidi, who is the corporate credit analyst on William Blair's emerging markets debt team. Alexandra, welcome to the show.
Thank you very much. Happy to be here. Thanks for the invitation.
Thank you so much for joining us today, Alexandra. Now, gold has propelled to new heights, right? But what's been driving this positive momentum for gold prices at the moment, Alexandra?
Yeah, so gold's positive momentum started in the beginning of last year with rate cut expectations and later on rate cuts from several major central banks. So we had the Fed, BOE, ECB, all cutting rates from mid-2024. The geopolitical and economic risks were also a major catalyst for the gold rally. We had elections in the U.S. late last year, and this year we saw tariff announcements from the U.S. to several key trading partners, including Mexico, Canada, and China. We also saw some retaliation and some reciprocal tariffs from China. The geopolitical uncertainty has also increased over the Russia-Ukraine war. At the moment, the U.S. and Russia are negotiating a ceasefire deal that doesn't include Ukraine or the European Union. And, gold loves any uncertainty, especially geopolitical uncertainty.
Right. Well, Alexandra, some are saying that gold prices could reach $3,000 by March. How likely is that possibility? I mean, what factors could push gold prices up this level of $3,000?
Yeah, so we're obviously very close to this level now. Today, I saw gold trading at $29.20. So I'd say it's quite likely now. I think more likely than not. With high geopolitical uncertainty and economic risk, we might see more safe haven interest from investors. Any escalations to trade wars or the U.S.-Ukraine tensions or deterioration in U.S. economic data can propel prices to high levels. We've seen positioning in ETFs and futures increasing, but we believe there is further room to go. We also saw firm interest from central banks for gold throughout last year, despite high prices in gold. And in fact, since 2022, we have seen increased central bank gold purchases, and this could still be a demand source for gold. For example, the PBOC, China Central Bank, which is one of the largest buyers of gold, they resumed gold purchases in November of last year and lasting through January this year. At least this is what we know so far. So yeah, I think more likely than not at this point.
I see. Well, then, could we see a bit of a retracement of gold prices once it hits that level? And overall, do you see the record rally of gold prices, sustaining, or do you foresee a pullback soon?
Yeah, well, absolutely. We could see a retracement. The levels that we see today in gold are very likely to cause a demand destruction in jewelry, and this is gold's physical demand. And note that jewelry is half of total demand for gold, so it's not negligible. And, there is a saying that the cure for high prices is high prices. And I like this saying very much. I think it is certainly true for commodity prices in general, and I think it might be the case in gold as well. So I think it will be a bit hard to see a fresh sustaining rally in gold prices from current levels. Demand from investors might stay at good levels, but lower jewelry demand might offset this, providing less support for gold prices. And there's also the dollar, right? Strong dollar as a result of the tariffs. The U.S. might also be a pullback driver for gold prices.
I see. Well, then, what kind of opportunities will investors see when gold prices continue to rise?
From our side, so from an emerging markets debt standpoint, high gold prices have made gold producers very attractive. Emerging markets is a very important market in general when it comes to supply of most metals. More than 70% of mined gold is produced from emerging market countries. So we have many gold companies in our universe. And the fundamentals of these companies are certainly improving because of the high prices, which allows them to invest more, pursue more growth projects, or even return cash to shareholders via dividends. Beyond that, I think there are other precious metals that might benefit and rally in sympathy, like silver and PGMs. This is platinum group metals, especially platinum, where we already see some good fundamentals. And we already see some sympathy rally in silver and PGMs, especially lately.
I see. Now that we've talked about opportunities, though, let's talk about some of the risks. What are the risks that are associated with gold prices reaching this key milestone of $3,000 level? I mean, could it be considered overvalued or overpriced?
I think, yes, it could be considered overvalued, especially as the high price might disincentivize certain parts of demand that we talked about before. There will be some demand destruction in gold's demand for jewelry, and central banks are also very strategic gold buyers, and they can afford to wait until better prices. That said, we did see central banks buying gold even at high levels, so it remains to be seen how this will play out this time around. So we might see some profit taking if gold reaches and surpasses that milestone, but arguably a price correction might also be a buying opportunity for some investors, especially in this macro environment. I would say that a broader improvement in sentiment and especially a resolution in political and geopolitical tensions might be a trigger for a sell-off in gold prices.
I see. Well, as gold continues to reach new record highs, how would you then advise investors to approach buying or holding gold in their portfolios? I mean, should they continue to invest or wait for a potential correction?
We are always cautious when we see commodity prices being too high too soon, especially in our fundamental analysis. We're very careful when we look at these companies. But I think a question whether to invest further or not depends on each investor strategy and their current positioning. Like, what is important right now? Is it important to hedge geopolitical risks, or is it important to benefit from further price appreciation in gold? I think the latter arguments might prove very difficult with current levels.
I see. Well, then how would a $3,000, price point for gold impact its role in a diversified investment portfolio? Would it become an even more attractive hedge, or might investors move away from gold in favor of other assets?
I think gold's proposition in being a safe haven asset is very unique, but I would argue that the 3,000 price points might be a bit of a deterring factor to add more gold, as the downside risks are higher with higher prices. As prices increase, the gold's value increase in a portfolio as well, making the argument for further buying weaker. As we discussed before, I think other precious metals might benefit, like silver and PGMs, especially platinum, as it has good fundamentals. There's also more diversified demand source for platinum rather than palladium, for example, and might also be benefiting from jewelry demand standpoint.
I see. And before we let you go here, Alexandra, what else will you be looking out for in the coming weeks that could, move gold prices?
Yeah, so something that is moving the gold markets these past 2 weeks is the ceasefire talks on the Russia-Ukraine war. Tension has been escalating between the U.S. and Ukraine regarding the negotiations for peace between Ukraine and Russia. So I would be looking out for how this plays out. I would also be looking out for any escalations to tariffs and trade wars. This can affect gold in two ways. First, from a sentiment perspective, if sentiment weakens, then this could benefit gold. But also tariffs are inflationary measures in nature, which increases economic risks, and this could be a further catalyst for gold. Also, any economic data releases in the U.S., especially as they relate to the dollar, I would be looking out for these too. Gold and the dollar have usually an inverse relationships, and we've seen the gold-dollar correlation breaking many times this and last year, but there is still risk of a stronger dollar pulling gold prices, especially at these high levels.
I see. Amazing. Well, thank you so much for your time and your insights today, Alexandra.
Thank you so much for having me.
Thank you. That was Alexandra Symeonidi, who is a corporate credit analyst on William Blair's Emerging Markets Debt Team. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.